Michael Saylor, thank you so much for joining me.
Thanks for having me.
I want you to walk me through how you see the global economy today.
Well, I think the economy's more intertwined than ever before, financially and operationally. And for the past few months, it's caught in a bit of chaos due to the uncertainty of how all trade flows will move forward. I think that there's a change in status quo that's destined. It's not clear exactly how that will settle. All the financial markets are reacting in a sort of manic fashion as they attempt to adjust. I tend to think that it's a mistake to extrapolate linearly based upon everybody's nominal pronunciations, because it's not likely that what we think will happen, but on the other hand, definitely there's change afoot.
Yeah. As an investor, is this the time to hold back and wait or make money?
My view on investments is I'm extraordinarily enthusiastic about digital capital. That is, Bitcoin is digital capital. I think that's the no-brainer because it has all of the appeal of a digital monopoly, a monetary network. So if you imagine a Facebook for money or a Google for money, it has the technology trend on its side, and it also represents digital gold, and there's an extraordinary enthusiasm for non-sovereign store of value assets right now. So if you're looking for a way to avoid counterparty risk, to avoid a currency risk, and to tap into a global technology phenomena, then that makes sense.
Is it a safe haven?
I think it is. I think
on par
Bitcoin,
with gold?
Much better than gold. I think that Bitcoin will be 10x, an order of magnitude more valuable than gold, and it will grow 20% a year. Beyond, when it's 10 times bigger than gold, it'll be growing 20% a year. So yeah, it's I think the best investment idea in the world. I don't think there's a second best investment idea. I think that there's $450 trillion of wealth in the global economy that's sitting in store of value assets. You could call it long-term capital. Like, people just want to keep their money. And right now, if you have a lot of capital, you would buy real estate, you would buy private equity, you would buy public equity, you would buy collectibles, you might buy trophy assets. All of those things were pioneered in the 20th century. I don't have to tell you about the reason people buy them. I could write you an encyclopedia on the risk factors, right? Your buildings burn, hurricanes, flood you out. There are rent controls on your property. There are tariffs. Everybody in the world is in a tariff tantrum right now. Every single, what they say, the best laid plans of mice and men, they're dashed, given a change in the political wind. So I think there's profound conventional risk in private equity and public equity. Bonds all have massive risk because they're all currency derivatives. Mm-hmm. Trophy assets and collectibles like art, they have cultural risk. If you collect Picassos and the culture decides they don't value Picassos anymore, then your wealth is devalued. So I think when you look at the 21st century, the question is, how do I keep my money? Right? If I gave you $1 billion and I dropped you in Africa and I said, go ahead and buy anything you want, you can buy a diversified portfolio of real estate or equity or currency or bonds or anything at all in any country in Africa, or you can buy digital property that sits in cyberspace worth the same $1 billion, and you can move it on a thumb drive, or you can zap it from point A to point B on your phone, and you can custody it anywhere in the world on an hour's notice. I think you would choose for option B, and option B is what Bitcoin represents. So what I see today is increasing uncertainty. People are losing confidence in governments. They lose confidence in currencies. They lose confidence in business models. Right? You got a great company, you have 1 million employees, but I'm about to automate out 957,000 of those employees with robots. Is that good for you or is that bad for you? Lots of risk in the world due to technology, due to politics, due to monetary policy. So what do people with wealth want to do? They want to run from the risk. Okay, I give you $1 billion of Siberian real estate, you can trade it for Bitcoin, would you? Of course you would. I give you $1 billion of Africa, you can trade it for Bitcoin, would you? Of course you would. I give you $1 billion of anything in Brazil, Mexico, Russia, pick any country. The general dynamic in the world's macroeconomy is this. People all want to move to the United States. People want to buy United States assets. People want United States currency. They want the most secure, the S&P index is up 10% a year in the US. The European equivalent, 1%, 2%. So what is the world trying to say? It says that the dominant network is the one we want. We don't want the second best or the third best. In the crypto industry, there are stable coins. There's the digital dollar and there's the digital euro. If you sit with the people in the industry and you say, well, what's the demand for the digital euro in Europe? The answer is 1%. 99% of the demand for digital currency in Europe is for the dollar, not for the euro. The euro is the second best.
Yeah.
If the second best is 1% of the best, what's the third best? The third best is 0.1%. So the big picture here is, in a world where people with wealth, with capital, are looking to preserve their money, how do you save it? And it's very simple. I convert my money from 20th century assets to 21st century assets. I convert from analog assets to digital assets. I convert from assets that are subject to nation state risk in Ukraine or Russia or Brazil or
perhaps
Africa.
Right here in America.
Or in America. And when you lose confidence in your government, and I can find a large plurality of investors in every country on earth that have lost confidence and faith in governments, banks, industries, etc. When you lose that confidence, you run for a safe haven.
Yes.
What do you want to do? Put your money in orbit, right? In this case, there's no hurricanes in cyberspace. There's no tariffs in cyberspace. There's no monetary debasement in cyberspace. There's no bank to steal your money in cyberspace. There's no wars in cyberspace, right? So what's driving Bitcoin? It's not speculation. It's not accidental. It's the relentless passage of time that's causing intelligent, informed capitalists to strip risk from their portfolio by converting a 20th century asset into a digital asset. It's like water flows downhill when you're staring at a waterfall. It's not accidental that the water went downhill. It's not accidental that time moves forward. It's actually the relentless passage of entropy. It's the relentless act of informed people that want to keep their money acting rationally.
Is Bitcoin a hedge?
Over the long term, it is, and really what it is just the future, right? If Bitcoin's growing 55% a year, it's going from what was a few million to a few billion to 100 billion to 1 trillion to 2 trillion. It's 2 trillion now.
Yeah.
It's going to 20 trillion over the next 4 years to 8 years, and it'll be $200 trillion in 20 years. My forecast is for it to be about $280 trillion by the year 2045. You could call that a hedge, but it's kind of like a hedge in the way that the United States of America was a hedge for Europeans when they were fleeing Europe for 200 years.
Yeah.
It's just the next frontier of economic development.
Yeah. Tell me this. Gold, physical asset, Bitcoin, cryptocurrencies generally, people say we can't hold it, we can't see it. Is that a psychological shift in your mind? Because it's essentially just assigning value to something perhaps they cannot see.
You know, the classic idea of money is the most liquid, fungible, saleable commodity asset in the world. And so for thousands of years it was gold. Gold was the best idea for sound money in the 19th century. In the 20th century, gold wasn't fast enough. You can't move gold back and forth across the Atlantic an hour. You can't settle with it. There's no way. There's 400 million companies in the world. There's no way for 400 million companies to settle with each other with gold. Right? Just not happening. It takes a decade to settle $10 billion of gold across the Atlantic. You know, a year would be fast. Bitcoin represents digital gold. It's the best idea for money in the 21st century. It is the world's most liquid, most fungible commodity asset. It's, you know, it is saleable. So, and it's better than gold, because no way you're going to teleport $10 billion of gold in a couple of seconds. No way you're going to put gold on 5 billion smartphones. No way that the computers are going to vibrate or program the gold to transform itself 1,000,000 times a second. And gold, like it or not, is inflating at 2% a year. 2% a year inflation means that the half-life of your wealth is 35 years. Bitcoin is 0%. 0% inflation means the half-life of your wealth is forever. It's the difference between economic immortality and a useful life of 70 years, maybe. So gold was a good idea. It was never a perfect idea. You know, if you read the history of the Rothschilds and go back to the 19th century, the Rothschilds traded sovereign debt. They traded credit instruments issued by governments. And that was the high frequency money, that sovereign debt. And then when they had a cash settlement referred to, we actually swap gold bullion or gold coin. But we don't do it often because it's very difficult and dangerous, and sometimes you lose the gold. So cash settlement was always difficult hundreds of years ago. 1,000 years ago it was difficult. With Bitcoin, it's different. You can now settle. I can trade $100 million a day with you, and we can settle every 4 hours.
Yeah.
Right? And so Bitcoin represents perfect money. It represents perfect capital as digital capital, and it's a basis to rebuild the entire digital economic system. So, yeah, it's the promise of gold, but it's 100x better.
So if it's the perfect capital, why aren't we using it to pay for things?
Yeah, because you don't pay for things in capital. If you roll the clock back 200 years, the Rothschilds didn't pay for things in gold either. It turns out
why
that,
am I not using it on my phone? And why am I not using it to purchase something at, you know, the
Okay.
ice cream that we were seeing this penetration happening, and it's slowed down?
Because money has two aspects. One aspect of money is high frequency money or payments. That's currency. When I actually buy a coffee, I'm buying a coffee with currency. I'm using the peso in Argentina. I'm using the dollar in the US. I'm using the euro in France. Nobody holds the currency for more than 4 years. If you're in a hyperinflating economy, you wouldn't hold the currency 4 months. Typically, the way the world works is you have local currency, which you would hold for weeks to months, like the peso or the Egyptian currency or the Lebanese currency, but no one's stupid enough to hold it for a decade.
I don't know if anybody would be holding the Lebanese currency.
Yeah, maybe, yeah. But the point is, by law, you have to use it for legal debts, and so they do exist. The world's got 100 local currencies. Most of them are very weak. The world reserve currency is the dollar. You would hold that for 4 years. But there's no rich person on earth that'll brag to you that 90% of their net worth is in dollars. You won't find a single billionaire that has the majority of the net worth in dollars. Nobody saves in dollars. They save in capital. So there's another aspect of money. It's long-term, low-frequency money. It's the money I'm going to hold for between 4 years and 400 years. What is that? It's land. It's a sports team. It's private equity. It's the Mars Corporation. It's public equity. It's my Magnificent Seven stocks. It's a diversified portfolio of stocks. It might be gold. So if something is perfect capital, that means you can buy it, keep it for 100 years, and your great-grandchildren will be rich.
Yeah.
I have a house in Miami Beach. It cost $100,000 in 1930. It's worth $100 million right now. 99.9% collapse in the value of the dollar. If you'd taken the $100,000 and you put it in a safe deposit box in the basement, you'd have 100 grand. That would pay about 3 months. It would pay about 6 weeks of property tax on that house. Nothing. You couldn't even run it's a month of fees. If you took the same 100,000 and you swapped it into real estate, it'd be worth 100 million. Why? Well, because the government can't print more beachfront property. They can print more currency. So the bottom line is if you're going to pay for something, a cup of coffee, you want to pay for it with a weak currency, which is a legal tender. They're all collapsing. The dollar is losing 7 to 10% of its value a year. But the weaker currencies, the risk-free rate in Brazil is like 15%. What that is telling you is the government is increasing the supply of real by more than 15% a year. The risk-free rate in Turkey is like 45%. Okay, so you definitely want to pay for stuff with the collapsing currency. And the smartest trade imaginable is you borrow a lot of money in a fiat currency, which is losing value, and then you buy a capital asset. Like the richest families in New York, they borrowed money, they bought real estate, right? Real estate's getting more valuable over time. The dollar is getting less value, but the peso has collapsed to zero 5 times in 100 years. You don't have to explain it to an Argentinian why they wouldn't save in pesos.
Yeah. Tell me this, how quickly, in your mind, will the US dollar cease to be the world's reserve currency?
It's going to be the world's reserve currency for the rest of our life, certainly for the next generation, maybe for 100 years. It's actually shows every indication of getting stronger, not weaker. If you look, for example, at
So you're not worried about what President Trump is doing at this point? Because we hear this every day on Bloomberg and on CNBC and elsewhere, a lot of fear about the US dollar.
Yeah, well, if you look, take the example of Tether again, the demand for US dollar as a digital asset is 100x greater than the demand for the euro. So if we're not going to use the dollar as the euro, the Europeans won't use the euro, CNY, the CNY would collapse if the Chinese didn't have capital controls on it. So yes. I just named the second and the third best currency, JPY. You think the world's going to adopt the Japanese yen? I don't think so. I think that the world reserve currency, right, it's based upon having the strongest defense network. As long as you're a nuclear superpower, that's part of it. And the other part is hundreds of millions of companies that have priced everything in US dollars, and then all of the accounting systems that are wired for US dollars. That's incredible inertia. So that currency is a protocol similar to the English language, and we're speaking English. And so I think it's similar to you asking me, when will all of the capitalists in the world stop using English? It's like, if the United States does a string of super intelligent things, that probably is good for the English language. And if we do a string of super not intelligent things, it's probably a bit weaker for the English language. But the English language, the dollar protocol, those things have incredible power. Not in the next 30 years will there be a difference. And so that's what I think about that. I think that Bitcoin, to make the point, is a monetary protocol, but it's a protocol for capital, not for currency, right? And once you understand that, it's a protocol for keeping your money for 100 years.
Yeah.
So if you took all the smart money in the world, if you took every intelligent person with money in the world and said, would you like to keep your money for the next 100 years? Yeah. Do you trust any government, bank, or corporation to protect it for you? No. Well, how do I keep my money without trusting a government, a currency, a corporation, or a collectible? And the answer is Bitcoin.
The president has launched his own coin. Do you see that as a contradiction? Because we're talking about, we don't trust the government, but now the president of the United States is saying, trust me.
No, I don't. I think if you think about digital assets, there are 4 classes of digital assets. There are digital commodities, there are digital currencies, there are digital securities, and there are digital tokens.
Yes.
Bitcoin is a digital commodity. It's an asset without an issuer. It is the king of them. It's 100 times more powerful than the next digital commodity. The best use case for a digital commodity is long-term capital, store of value asset, long-term money, low-frequency money. Put that aside, right? And that's a big deal. That's worth $400 trillion, right? Yeah. That's the most valuable thing in the world. There's nothing more valuable than we all get to keep our money, right? Digital currency, right? That's a stable coin. That's like the US Tether or Circle. What's the use of it? It's like medium of exchange. How big is that? $10 trillion. It's not small. I mean, 10 trillion is a lot, and right now there's probably $250 billion of stablecoin. So if the US government regulates that, you'll see that go to $1 trillion, $2 trillion, $4 trillion, $10 trillion. What's it competing against? Every other currency.
Yes.
Who's the loser? Every weak currency. Nobody's going to want to, every currency in Africa will collapse, right? No one's going to use any of them.
Yes.
Right? Digital securities, that's just tokenized stocks and bonds, right? And you're going to see those circulate. What is Trump coin? It's a digital token. How many are there? There's 37 million tokens. You know, are they valuable? Well, it depends upon whether the issuer imbues them with value. Trump coin may be valuable because Trump's a celebrity. Katy Perry token could be valuable. Tom Brady coin could be valuable. On the other hand, some of them won't be valuable. There's 400 million companies in the world. I can imagine every company issuing their own digital token.
Yeah.
And can I imagine them being valuable? Sure, I give you a token that gets you a seat in my restaurant on Friday night. I tokenize my fan club and you get front row tickets.
Right.
Like, the latest thing was Trump saying, you know, the token providers will get invited to dinner at the White House. You can create a fan club or a country club, you know, and you're a country club member, I tokenize it, you can trade it. Tokenized country club membership would be more valuable than non-tradable, non-fungible. So the point is, you can tokenize a lot of things. It's not a threat to the dollar. It's not a threat to Bitcoin. The reason Bitcoin works is 100 rich families get together and don't trust anybody or any company or any bank or any currency, and they don't trust each other, but they want to keep their money forever. So they have to create this decentralized program in cyberspace run by incorruptible software, and then they have to all run a version of it, and that way it's like a monetary virus.
Yeah.
It works because it's so diffuse. And like, why does English work?
Yeah.
Because all the rich, powerful people speak English. You see, how do I, you know, what if I change the meaning of the word for to 3?
Yeah.
Well, I don't get away with it. Even I could be a mega billionaire, but I can't change the meaning from 4 to 3 because all the other rich, powerful people think that 4 means 4. So when you have a protocol that diffuses like that, its staying power is a function of how much power and how much wealth has adopted and is committed to the protocol.
So right now the ECB and the European Commission are tying themselves in knots over stablecoin, over digital currencies generally, and what that will mean for the euro. Are their fears overblown in your mind? Or is this just another symptom of Europe really staying on the back foot?
I think that the future is digital. And it's pretty clear, we're going to tokenize your country club membership. We're going to tokenize the fan club. We're going to tokenize the euro. We're going to tokenize a bar of gold. We're going to tokenize the dollar. We're going to tokenize capital. And if you fight it, if you resist it, then...
Which is what they're doing, essentially.
Yeah, then the future passes you by, right? You're going to manage to block yourself from the digital economy. Like, take these AIs, you may be afraid of them, but they're going to be 1 billion times smarter than us and think 1 billion times faster than us. You know, so when you go to bed and you tell the AI, take care of my money, the AI is going to want to move it 18 million times an hour. And so if you have a banking system that requires that you wait till Monday morning and take a phone call from your local banker to approve the first transaction, the AI is going to bypass that. Right, so the intelligent economy is going to bypass the manual economy. It's going to bypass the regulated economy. My advice to the White House here is you need to have clear regulated frameworks. You need to have a taxonomy for tokens, currencies, digital securities, and digital commodities. You need to let issuers issue digital currencies. They need to issue digital securities. They need to issue digital tokens. They should be responsible for not lying, cheating, and stealing. They should have ethical, economic, criminal, and civil responsibility for them. But once you issue them, they need to circulate friction-free at the speed of light and as fast as the computer can think.
Yeah.
And so if the regulators come in and they cripple the ability of the computer to think, It's like, we would like to pass a law making light not move through Europe, or we would like to make people stupid.
Yeah.
You can pass the law, but you can't stop the passage of time. What will happen is all of the money will flow out of Europe, and all of the commerce will leave. And it's like, it's like those maps of North Korea at night where you look down and they realize they have no light. It's good for you. You cut off electricity in your country. We're talking about digital energy. And I don't think you want to cut off digital energy because the entire 21st century economy is going to run on digital energy.
Talk to me about that energy dynamic, because obviously the Trump administration has pushed U.S. energy dominance. How important in your mind is this for crypto generally? Because it's a lot of energy that's necessary, and the president has said, let's turn on the taps, let's do everything we can to produce more.
Energy is an important input to the Bitcoin network because Bitcoin uses electrical power and computer power to secure the network. But at this point, that network is 100x to 1,000x better than the next best thing. So for the next decade, whether or not you have plus or minus 20% energy doesn't make a difference to Bitcoin. It probably doesn't make that much difference to the crypto industry. It makes a huge difference to the future of the entire economy. I would say it's pretty obvious, for example, that the AI economy needs massive, 400 gigawatts of electrical power to move forward. So massive amounts of energy. So I think it's pretty clear that the cars are going to drive themselves. The robots are going to think for themselves. The AIs are going to do the work of 1 billion people. They're going to do it with very sophisticated silicon as manufactured by NVIDIA and TSMC, MC, etc. And they're going to do it with massive amounts of electrical power. If the economy doesn't have the electricity, you can't think. And so I think it's inevitable we need to produce a lot more electrical power. We're going to have to do it with technologies like nuclear, because you need to be able to generate a base load, not intermittent. You're not going to power up the intelligent economy with wind and solar. You can't afford to have your car be stupid at night, or you can't afford to stop thinking when the wind stops blowing, right?
Yes.
You need the power. I think that it is a critical input to any economy to have massive amounts of cheap electrical power, and the demand for this stuff is exploding. Like at this point, I use AI, and I find myself, first I used AI, and then I found myself putting it in deep research mode, and now I make it grind, and I think I must be using something on the order of millions, if not tens of millions or hundreds of millions of times as much electricity for this stuff as I used to use for simple search.
Do you anticipate that oil prices are going to go back up simply because of this energy demand?
I don't have a strong opinion on that. I think it'll be a function of the balance between energy produced by oil, energy produced by natural gas, energy produced by nuclear and by coal, and how fast they manage to grow each of those sources. There's going to be a righteous, competition, a market competition. But if you were to ask me in general what the trend is, I think the trend is anybody that can produce energy, or any commodity that produces energy, is going to be in higher demand, and the demand's going to keep growing for the next decade. I think there's no doubt about that. So I would be more bullish than bearish on oil right now.
Speaking of bull versus bear, I've heard the bull case for Bitcoin. What is the bear case?
The only real threats for Bitcoin are just ignorant regulators at this point, and it doesn't stop Bitcoin, it just cripples Bitcoin in a certain country for a certain period of time. So most of the FUD tends to be some regulator that's worried that it's too good. And we saw that in China about 3 years ago, where they banned Bitcoin mining because it was too good, primarily because Bitcoin is a way to evade a capital control. So I think wherever you see capital controls implemented and currency collapses, you'll see a bit of FUD, because regimes that have their banking system failing and their currencies failing will look for somebody to blame. And, you know, for how long? During the U.S. Civil War, they blamed all their problems on gold smugglers and speculators.
Yeah.
So I think that you'll see a little bit of that noise on the periphery, but at this point, Bitcoin's reached escape velocity. I think it's pretty unstoppable. The White House has anointed it as the one sole digital commodity in the world that they recognize. That makes it digital gold, that makes it ethical. And so if the most powerful man in the world says it's digital gold and says don't sell your Bitcoin and we're going to buy more, I think that the last hurdle has been leaped in terms of on the path to legitimacy.
So tell me, if you're a sovereign wealth fund, Saudi Arabia, the United Arab Emirates, Kuwait, how would you be diversifying that portfolio? How much Bitcoin would you own?
All of it. Look, to tell you the truth, I think it's kind of an IQ test. It's like if you had $1 billion and you wanted to double it, you would buy the $1 billion of Bitcoin and put out a press release. But if you wanted to make $1 trillion, you would try to buy as much as my company has right now. You go buy $50 billion worth of Bitcoin and just keep buying, and it'll be $1 trillion to you. So you ought to buy as much as you want money, right?
Yeah.
I think that my forecast for Bitcoin is it goes up 29% a year compounded for 21 years, which is going to be 3-4 times better than the next best thing. So yeah, I could tell you, yeah, put 5% of your portfolio in it, but smarter would be to put 150% of your portfolio in it. If you want 10x your money, you buy Bitcoin. If you want 100x your money, you buy Bitcoin with somebody else's money. And if you want 1,000x your money, you use somebody else's money, buy Bitcoin, and you lever it, right? The simplest thing going is borrow money at 3, 4, 5%, invest it at 30 to 60%, keep the difference. My company went from a $600 million enterprise value to $108 billion enterprise value in 4.5 years, and we just did that formula. We're just levering it. So I think as much as you can get is the right answer.
Tell me this, so the UAE, Saudi Arabia, Kuwait, all of these countries that are rich in commodities, in oil wealth, gas wealth, in Qatar, these are countries that are right now under discussion as preferred partners when it comes to data centers, when it comes to their ability to have that cheaper energy and to fuel sort of the energy that we need for AI. And they're also crypto mining countries as well. What's the opportunity there in your mind?
It's like being the Switzerland of the 21st century. There's trillions of dollars of digital capital right now, but it's going to $200 trillion. So it's going to want to find a home. And so what are you looking for? You're looking for a favorable tax regime where it will be most favorably taxed. Second, you're looking for favorable regulation. Do they recognize the primacy of, is Bitcoin a digital commodity? Is it recognized? Mm-hmm. The third thing you're looking for is institutional grade custodians. So is there a bank, right, in Emirates? Is there a bank in Kuwait? Is there a bank in Qatar? Is there a bank in the kingdom that will custody my Bitcoin that I trust? Right, that has got a license from the government, that has the support of the government. I think you've got a world full of people. Say you're someone with money in Nigeria or Egypt or Brazil, and you don't trust your own government. You're going to convert your wealth to Bitcoin, and then the issue is what custodian you're going to send it to. You're going to want to send it to and bank with a bank where. So we have yet to see who will emerge as the digital Switzerland.
But you think it could be in the Middle East?
It could.
In the Gulf?
Yeah, it definitely could be.
Yeah.
It would be logical for them to do it.
Yeah.
If you have $100 billion, you can buy $100 billion of oil and bury it in the ground, or you could buy $100 billion of gold, or you could buy $100 billion of Bitcoin. But the $100 billion of Bitcoin is going to move at the speed of light and think at the speed of the most intelligent AI, and it's going to be a global asset, and you're going to be locked into the entire global economy. It's the most interesting, useful thing in the world. Why wouldn't you want to be the center of that economy?
What is the thing that keeps you up at night? What are you most concerned about?
I think about ways to get more Bitcoin. How do I buy more Bitcoin? We just announced this morning we bought $1.5 billion last week. And so at this point, our company has acquired $30 billion in the last 5 months or 4 months. So we're buying billions a week as fast as we can. So our corporate mission is we're securitizing the Bitcoin. What we're doing is we're issuing Bitcoin-backed equity, Bitcoin-backed convertible bonds, Bitcoin-backed preferred stocks, and we're bridging the traditional capital markets with the crypto economy. There's just a lot of work to be done there, a lot of investors to speak to, IPOs to be done, securities to be created, etc. So that's my primary focus day and night.
When you think about what happens next, and I'm talking about the long haul, in 100 years, in 150 years, when people look back, who do you think will be the most, or seen as the most influential figure or narrative? Is it Jesus Christ or Satoshi?
No, I think Satoshi marks the inflection point or the singularity where economics went from being an art to being a science. What Satoshi gave us was the theory of perfect money. And if you look at all economic writing and all monetary theory and all banking before Satoshi, we were all crippled by an imperfect commodity, gold. It was never perfect. It was always expensive. It was always inflationary. The 49ers crashed the gold market. Julius Caesar crashed the gold market. The Spanish, Armada crashed the gold market. So we've always had that problem, and then currencies have been collapsing 1,000 times. There's 1,000 examples of hyperinflation in history. So it wasn't until Satoshi that you had a perfect theory of money. And then we didn't know it would work, and then over the course of the next decade, Bitcoin spontaneously monetized. And so if you actually have perfect digital money or digital capital, you actually can form a theory of the economy that's scientific, that's based on mathematics and based on engineering principles. And you realize that everything before was just, superstitious garbage.
Yeah, so we're talking about Jesus Christ as something that is based on faith.
Yeah, well, the difference is, here are the similarities. The similarities are, religions are ideologies, and Christianity or Islam, they're both an ideology in search of economic immortality. An ideology in search of spiritual immortality is what I meant to say. Bitcoin is an ideology, but the objective is economic immortality.
Yeah.
So one of them is, how will my spirit go on forever? The other is, how will my economic energy, my money, go on forever? And they are protocols, there is ritual, but there's nothing faith. You don't have to take anything on faith. The truth is, you can see the cryptography, you can see the network running, you can test it, you can try to break it, you can use it. It is more akin to base 10 math, the English language, electricity, fire. It's a technology, the internet, it's a technology protocol. Or I tell you, we figured out how to send, radio waves, and we can speak to each other from thousands of miles away, and you think that's magic. But the point is, you don't have to take it on faith. It is technology. It will change the world. And Bitcoin is a monetary technology. It's an ideology that spawns a protocol that creates an asset that is circulating on a network, and everybody can choose to interact with it, as they wish. But I'll give you this one observation, which is, it's the closest thing to a monetary union. As the rich and the powerful join the union, they get more powerful and they get richer. And so the more people that join the network, the more powerful the network becomes, and the more people in the network become. And you can see how this builds up force, and it's a self-perpetuating viral phenomena. So it's it's kind of at this point, I believe, unstoppable. And I would invite people to study it and figure out how they can best benefit from that phenomena.
How do you defend yourself from those who would say that MicroStrategy is a Ponzi scheme?
Well, we're a company that's acquiring an asset in the same way that a real estate development company, a REIT, is acquiring an asset. So we can point to the 500,000 Bitcoin we own. It's verifiable. You can see it. It's about 2.6% of the network, in the same way that a REIT would point to owning 2.6% of Manhattan, right? The asset is there. What we're doing is we're issuing securities to buy more of it. So the REIT issues equity or debt instruments to buy more land. We issue debt instruments or equity to buy more Bitcoin.
Bother you? That narrative?
I think there's a lot of people struggling to figure out what is Bitcoin, and then what is a Bitcoin treasury company, what is a public company that buys it. But I imagine 100 years ago, if you're building a company based on electricity, people would wonder, is it real or not real? I think the internet companies had the same thing. It's like, what's there? Yeah. It's an explosive new technology. It's a paradigm shift. Generally with paradigm shifts, it takes an entire generation. The old guard has to die. The youth, the new generation, adopts the paradigm. It becomes very natural for them. But it's criticized by the old guard. Like rock and roll was criticized by classical musicians. Electricity was criticized by the people with the steam engines. The automobile industry was criticized by the horse and buggy people. As like aircraft industry was criticized. All of those industries are always criticized. You have to fight through the criticism by being cheerful and constructive and educating the market. And over time, over a 10 to 30 year time frame, what seemed to be scary and dangerous and spooky just becomes normal. In the English language, we have the word shock. It means getting too close to electricity. We have the word burned. It means getting too close to fire. And yet we have the General Electric Corporation in New York City is based on electricity. Turn the electricity off, the city dies. And Henry Ford took the fire, put it into an engine, put it in a car, created the entire automobile industry. So engineers are harnessing something that's explosive, dangerous, incendiary, nitro, crypto. But at the end of the day, if you want your company to live forever, you need to put a crypto engine in it. If you want your car to drive forever, you need to put an atomic motor into it. And of course, there are going to be people that are going to be afraid of both, but it is the future. I'm optimistic over time that people will embrace it, because for the most part, people want to keep their money, and they want to be rich, and they want to be powerful. Why wouldn't you want to be rich and powerful? There are nations that didn't embrace nuclear power. They don't embrace nuclear weapons, but they're not the ones that win the wars.
So you've been in trouble with the SEC before. You had to pay a fine. What do you say to people who say, why should we trust him now?
There's 100,000 pages of SEC filings that they can look at if they want to understand what the company does. We're a public company.
So you make no apologies.
For what?
Do you think that there is, as you say, a misperception of Bitcoin, a misperception of what digital currencies are, that frankly is holding back the industry, is holding back people from coming to a point where they are using them more?
I think the conventional financial establishment doesn't really appreciate the power of digital capital. But it doesn't matter, because you don't need to convince everybody. You just need to convince anybody. So no, I wouldn't say it's being held back. It's the fastest growing thing in the world for the past 15 years. Like Bitcoin is up 55% a year for the past 5 years, and the S&P is up 10. So if growing 5 times faster than the S&P index is failing, then we just keep failing up, right? I would say it's more like an economic shock wave. It's moving so fast that people can barely get out of the way.
How much do you sleep at night?
I sleep normal, just like everybody
Just normal,
else.
but you're not checking your Bitcoin.
No.
No.
Actually, it's not very. Once you get on the Bitcoin standard, you don't have to worry about these things. You realize there's 100,000 things you worry about if you own real estate, or if you own equity, if you own stocks, if you own bonds, if you own currencies. I don't worry about any of those things. I don't have counterparty risk to a country, a currency, a company, a competitor, a culture, a creditor. None of those things exist for me. They just don't matter, right?
When they attack you, when you see these articles in the Financial Times, I mean, do they call you? Do they ask you for comment to counter the narrative? Does it upset you?
No, first of all, I don't even read the Times. Second of all, most mainstream media has missed out on this trend. And let me just give you some simple facts. The most successful stock in the S&P 500 universe is my stock, which is up 3x to 4x more than NVIDIA.
Yeah.
So NVIDIA is the most successful S&P company, but my company's 3x, 2,700% over 4 years or more. The most valuable options in the market are my options. It's like a $70 billion open interest. They're the most valuable stock options in the world. The company with the greatest open interest to market cap in the SP universe is my company. The company with the highest volatility in the S&P 500 universe is my company. The most successful convertible bonds in the market are my convertible bonds. The biggest convertible bond market issuer in the world is my company. The most valuable and the best performing bonds in the world are my bonds. The most successful preferred stock issued is my preferred. The most liquid one is my preferred. And the most successful commodity in the world is Bitcoin, the company that we're built on. So right now, the story is there's a new technology and there's a new financial paradigm. We have pioneered the idea of recapitalizing a publicly traded company on digital capital. If Bitcoin's going up 50% a year and the S&P is going up 10% a year and the after-tax return of a short-dated bond portfolio is 3%, then that means that someone capitalized on sovereign debt's losing 7 to 10% of their capital every year. Someone capitalized on Bitcoin is generating 40% more capital every single year. This is the story hasn't been told by the mainstream media. All they will do is look at this and say, oh, they're taking undue risk. Well, you know what? We have the highest Sharpe ratio. Our returns on a volatility adjusted basis are better. We're really not taking risk. That's the great irony of all of this. So I don't bother worrying about the critics. There are some people, like the S&P is up 10% a year. The entire endowment industry, managing every Ivy League endowment, generates 8% a year. That is, collectively, every money manager running every Ivy League portfolio is destroying 2% of their capital versus doing nothing and buying the S&P index. That's the conventional market. The number of hedge fund managers that beat the S&P last year, 4. The number that beat Bitcoin, 0. So what are we worried about? We're not really worried about the criticism from the conventional business. The truth is, I don't know why anybody buys any of that stuff, right?
So when Jamie Dimon pushes back and says, you know, I don't like Bitcoin, I don't want to talk about crypto anymore, what's your reaction?
100 years ago, people didn't want to install electricity in their factory. 100 years ago, there were people afraid to fly, right? And so 70-year-old executives afraid to get in an airplane, and the year is 1930. What is your reaction? Okay, that's reasonable. His generation is afraid of airplanes. It's 1905, and you know, the manufacturing magnate with steam power in the middle of the factory is afraid to install electricity. Well, what's your reaction? Well, his generation didn't grow up with electricity.
So you're saying these folks are limited?
I'm just saying it's a generational thing. Warren Buffett grew up in a world of a set of assumptions. The dollar was reigning supreme, and U.S. equities were a reasonable bet, and his worldview consists of picking a bunch of equities in the United States, and that's a totally fine worldview as long as your portfolio isn't in Argentina. If you had diversified a portfolio of the best equities in Argentina, you would have lost 100% of all your money 3 times in his career. So the point really is, the world's full of people. They have a certain world that they live in. They think relative to that world, and if you think about their views make sense after 40 years or 50 years of success in that environment. I guess what I'm saying to you is, when you're on the Titanic and you've been on the Titanic for your entire career, and it starts sinking, you have to abandon the Titanic, right? And a lot of people just want to shuffle deck chairs on the Titanic, but that's their view. They can't imagine a different world. For me, it's not that different. It's not that hard, because I can imagine relative frames of reference, right? We're not in flatland. We're on Earth. It's spinning while it's rotating around the sun, while the sun is transiting through the Milky Way, while the Milky Way is moving, through the universe, right? And when you understand that, and you can see all the various relative motions, then it seems fairly straightforward. I think that most of the world is coming to grips with this new idea, and let me apologize for them. For 100 years, the only capital asset that a publicly traded company could legally hold on its balance sheet was sovereign debt.
Yeah.
Like, pretty much 50,000 public companies are all capitalized on sovereign debt, short-dated treasuries. And that's because the SEC 40 Act says you have to use a commodity. You cannot capitalize on securities. So that being the case, every commodity in the world before Bitcoin was garbage. Gold's an awful asset, but it's the best of the awful. The rest are worse, right? You wouldn't want to capitalize a company on soybeans or natural gas or barrels of oil for 100 years. And gold is not very easy. It's just too slow. You can't easily trade it and move it around. So nobody really did. And so now we're waiting for one commodity that competes with currency, with fiat currency as a capital asset. You just got one. It's only been, institutionally adoptable for the past few years. It was really only in January of 2024 the SEC approved the spot ETFs, and before that point, a lot of people were worried that it would not be designated a commodity by the SEC. And it's only since the beginning of 2025 that the accounting industry has designated fair value accounting for it. So the regulatory treatment and the accounting treatment were keeping back a well-managed organization from capitalizing on it or using it. And even today, no major bank in the world will take $1 billion of your cash, buy $1 billion of Bitcoin, and hold it for you. And so the banking industry has been kept from banking this asset. And so if the regulators don't like it, if the accountants don't like it, if the banks don't like it, every successful, responsible businessman running a responsible institution would be afraid to endorse it, because those 3 things are like third rails. But what happened is the SEC did make it a commodity. The White House reaffirmed that a few weeks ago when David Sachs said this is digital gold. The president told you. And the Secretary of Treasury, Scott Bessent, said we believe in digital assets, and they've explicitly begun to give guidance to the FDIC, the OCC, and the Federal Reserve that they should encourage banks to handle Bitcoin. You saw those memos go out just last week. So we are in a sea change where something that was toxic and scary and incendiary to the world is now transitioning to being an institutional grade asset. I don't expect 60-something, 70-something executives that spent 40 years of their career learning a different thing in a different world to immediately embrace it, nor should you. But that doesn't change the truth of the matter, which is the White House has endorsed this as a commodity. They've endorsed it as the most valuable asset in the entire ecosystem. You know, the only thing the U.S. government won't sell are its nuclear weapons, its national parks, and its Bitcoin, right? Think about that for a second. That's the President of the United States saying, don't sell your Bitcoin, right? That's David Sachs saying, this is the only asset without an issuer that we recognize. And between them and the Secretary of Treasury saying it's okay for banks to custody this stuff, it's pretty clear that we've moved into year one of institutional adoption. These banks are bureaucratic institutions and they're conservative, and if they weren't conservative and careful, they would have got blown up by now. So they will take their time, and over 4 years, you'll start to see them embrace it. But, you know, it's what I said today online. I said, look, when the banks bless Bitcoin and when the experts tell you it's a good idea, everybody will want to buy it, nobody will need to sell it, and you won't be able to afford it. So if you're waiting for the risk all to be stripped away and for someone richer and powerfuler and stupider than you to tell you it's okay, you'll wait, you'll pay $10 million of Bitcoin.
Yeah.
Right now, you get 99% discount because you have to do a little bit of research and come to your own conclusion.
So what is your outlook? 6 months, where will Bitcoin be?
Higher.
Higher? How much higher? Give me a number.
I don't have, look, I don't have short-term forecasts, and I think that anybody that's holding it for 6 months is thinking wrong. I think the shortest time frame that you should have for buying and holding Bitcoin is 4 years. 10 years is more reasonable. Forever is the best time frame. My forecast is, and I gave this last July, and I've been pretty consistent here, is Bitcoin's been about a 60% ARR asset with a 60 vol for the past 4 years. It has consistently over its life, it has decelerated in growth and it has become less volatile. And if you look at the S&P as like a 15 ARR, a 15 vol, like the VIX is 15 vol to 15 ARR, you have conventional equity here, which is 100x as much, and then you have Bitcoin. Bitcoin is going to decelerate from 60 to 55 to 50 to 45 to 40 to 35 to 30 to 25 to 20 over 20 years. And 20 years out, in the year 2045, it'll be about 20% growing. And the volatility will come in from 60 vol to 20 vol the same way as the structures develop and as liquidity develops. And when we get to the back end of that, I think that the equity portfolios will probably be like 12 ARR, 12 vol, or 15, 15. Bitcoin's always going to be a bit more volatile, and it's always going to be higher performance because it's more useful, because it has all of the guardrails stripped off it. Because on Saturday morning, if there's news in Singapore, someone can go long 50x and cross-collateralize it with their yo-yo coin. And there's no one to say you can't do it. And if they turn out to be wrong, somebody goes short 25x and they wipe them out. But the point of that is that generates volatility. That volatility creates a natural interest and a natural interest rate. Like you can hold a share of my stock, MSTR, and you can generate 100 to 150% interest just selling that volatility. If that's what you want, think of that as the magnetic field for capital. It attracts capital into the network. And as we attract that capital, that drives up the price of the asset because there's only 21 million Bitcoin. So the network is growing because it's interesting, because it's useful, because it's global, because in theory 400 million companies can all trade and settle with each other peer-to-peer with no intermediary, because there's nobody to tell the entrepreneur in Nigeria, don't do that. Everybody can do that. And so I think that we can expect high performance, high volatility, but it will mature. And you know, if you have long-term capital, if you have a portfolio of long-term capital, stuff you're going to hold for 4 years or longer, probably a lot of it is private equity, public equity, or real estate or collectibles right now. What I would say to the normal investor is take some portion of that long-term capital portfolio and allocate that to digital capital. You're buying the world's premier global monetary asset.
Michael Saylor, it's great to see you. Thank you so much for joining me.
Thanks for having me.